YouTube channel, The Accounting Educator. I'm Safir Ahmed, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as early career ambassador. In this video, I'm covering Task 1 AAT Level 3 Financial Accounting Practice Assessment 1. Okay, so this is Task 1. They normally tell you that what is covered or which topics are covered as part of this task. So as you can see, this task is about using daybooks. So daybooks is another name of books of prime entry, as you know, and accounting for and monitoring non-current assets. So in other words, tangible non-current assets, property, plant, and equipment, things like, of course, land and building, plant and machinery, fixtures and fittings, business vehicles, office furniture, office equipment, etc. So there are only a couple of marks in relation to the day books, which is the books of prime entry. As you can see, the part A. Complete each of the following statements. Details from credit notes sent out regarding a prompt payment discount will be entered initially into the... Now, the credit notes sent out in relation to the prompt payment discount, sent out means, of course, these credit notes are sent from business to the customers. So this business is sending out to the customers. So in other words, that's in relation to the discount allowed. And discount allowed initially will be recognized in the discount allowed daybook. So in the drop-down menu, we have discount allowed daybook as a correct option. Details of cash sales will be entered into. Now we know all of the cash transactions are entered in a cash book, except those small transactions, which is normally, those are entered in a petty cash book. But as you know, the cash sales is a regular cash transaction. So this will be entered in the cash book. Okay, so that's that. So there are a couple of easy marks, I would say, which is kind of AAT level 2 level. The second part of part A is if an item of revenue expenditure is mistakenly classified as capital expenditure. So what they're talking about here is, so for example, if you record vehicle expenses as vehicle at cost. So in other words, that you have recorded an expense as an asset. What is the effect on the following items in the final accounts? Now, if you think about it, an expense you recorded as an asset, which means that you have understated your expenses. Now, when you understate your expenses, the impact on profit is that profit will go up. So remember, incomes minus expenses is your profit. So if you understate your expenses, that means that the profit will be higher. Non-current assets, again, unnecessarily an expense you have recorded as an asset. So therefore, non-current assets will be increased as well, overstated as well. Current assets, well, this got nothing to do with current assets, so there will not be any effect on that. Current liabilities, again, this transaction, this error did not involve any liabilities, so no effect on current liabilities here. Okay, so a little bit thought process, I would say here, but still it is quite straightforward. Next part, complete the following statement about depreciation. Depreciation is an example of the use of, now we know that it is in accordance with the accruals concept. The drop-down menu they have given us is materiality concept, business entity principle, or accruals principle. They use the word principle rather than concept, which is fine, but it is accruals principle. Next part, which is in relation to the depreciation, calculation of depreciation. So they ask you to calculate annual depreciation and then, of course, accumulated depreciation. So you can see there are 4 marks in relation to this task. So you are working for Dave Johnson, a sole trader with a financial year and date of 30th of June. Dave is registered for VAT, which means that VAT will not be included in the cost. What does that mean is, if a business is registered for VAT, they will be claiming that VAT back. So therefore, technically it did not cost them anything. Here's a policy of depreciating vans using the straight line method at 20% per annum, assuming a residual value of 10% of the purchase price. The depreciation is prorated for every full month that the van is owned. So when you see this sort of policy, always make a note of the year end, because remember that if they sold a van or if they bought a van, so the depreciation will be based on proportionate basis for every complete month that the business had this asset. They disposes of the van on 1st of February 2015. Calculate the annual depreciation. So can you please take a picture of this at this point of the video, so then you will know that which amounts I'm talking about. Okay, I hope you have taken a picture of that. Okay, so this is part B1, which is annual depreciation. And using straight line method. Now, how do you calculate it? You calculate it depreciable amount times by depreciation percentage. Now, what is depreciable amount? As you know, that this will be cost minus residual value. Okay, so how we can calculate that? Well, we know the cost of this asset, which is given to us 27,500. So 27,500. The residual value is 10% of this. Now, there are a few ways that you can calculate it. The shortest way, I would say, if you directly times it by 90%, so this will be after deducting the residual value, so which will be your depreciable amount. So 10% is residual value, so cost minus residual value, so it will give you depreciable amount. So which is 27,500 times by 90%. And this is your depreciable amount. So now the annual depreciation, it will be simply 24,750 times by, so they've given us the percentage as well, which is 20% per annum. They have given us, so which is 20% of that is your annual depreciation. So 24,750 times by 20%, which is 4,950. So that's the part 1 of part B, or sub part 1. And then this is now the second one, which is the accumulated depreciation. Now here, the date of purchase and date of sale is really important, because you will be calculating for each year on that basis, for full complete month basis that the business had this asset. Accumulated depreciation, remember, this is depreciation to date. So in other words, that when we sold this asset. Now, if you look at the information that Dave purchased a van for use in his business on 31st of March 2013. Yeah. Now, always make a note of the year end. So what is the normal year end for Dave? Or what is the financial year or accounting year, in other words, which is, they told us that it ends on 30th of June. So which means that the first year in relation to this van is going to be from 1st of July 2012 until 31st of March 2013, not 21st of March, sorry, 30th of June, remember, 12 months, 2013. So if you think about it, that this person purchased this van on 31st of March 2013. So in relation to the first year, how many months are relevant in relation to this van? In other words, that from the date at which this person bought this van, which is 31st of March, until the year end, which is 30th of June, 3 months is that. So which is April, May, and June. So first year depreciation will be proportionated for 3 months. Okay, so we already know the annual depreciation, which is 4950. And if you times it by 3 divided by 12, it will give you the first year depreciation, 4950 times by 3 divided by 12. So that's the first year depreciation. What about the second year? So second year, in other words, it will be from 1st of July 2013 until 30th of June 2014. Thirtieth of June 2014. So you can see that for the entire of this year, throughout this year, this business had this van. So which means that it will be second year depreciation will be basically full year depreciation, which is, we already determined that annual depreciation, which is 4950. And then the third year depreciation, now you can see that this van was sold during the third year, which is on 1st of February 2015. Okay. So the third year, for how many months that this business had this van? So it will be from 1st of July 2014 to, which is 1st of February. So technically 31st of January, you will say, because remember that for each completed month. So 31st of January 2015. So which is, how many months is that? 7 months. So again, we will be calculating the depreciation in relation to this van. We will be proportionating it for 7 months. So we know the annual depreciation, which is 4950, and times by 7 divided by 12. Which is that. And accumulated depreciation will be when you add all of them together. So which will be first year, second year, third year, which is 9075. Okay. So here, the annual depreciation is 4950. And here, 9075. Okay. The next part of this task is about disposal. So Dave purchases a new van from H. Smith on 1st of February 2015, trading in the old van as part exchange. The list price of the new van is 36,000 plus VAT. He receives a part exchange of 9,500. Now, what you need to know is what goes where. So when we remove the asset which is disposed of, then remember that is asset at cost account credit and disposal account debit. So we'll be recording that here. So here it will be vehicle at cost account. Now, please be mindful that disposal account is in relation to the asset which has been disposed. In this case, it has part exchanged. So this is the original van we were talking about. Remember, 27,500. On the other side, accumulated depreciation in relation to this van, which we determined in that, which is 90575. So which is your vehicle accumulated depreciation. Okay, and what else goes in here? So if the asset was disposed of by getting some money, in other words, in that case, it will be disposal proceeds. But if it is part exchange, it will be the part exchange value. And the part exchange value, and sorry, this will be, of course, vehicle at cost. Okay. And as you can see that he receives a part exchange allowance of 9,500 net of VAT, so which will be 9,500. Now, if it was including VAT, remember that here the values we will record here is going to be the exclusive of VAT amount, because VAT, we remember, tackle that separately as part of the VAT submissions, VAT returns, VAT control account for the internal records. Okay, now, so this will give us either profit or loss. So as you can see that on the credit side, it will be the balancing figure. If it is on credit side, it's a loss, and that will be recorded as statement of P&L. So the difference between basically 27,500 and 18,575. Which gives you 8,925. Yeah. You can see that this is for 8 marks, quite heavy marks. If you understand this well, what goes where, debit and credit, and how to calculate the balancing figure. Another way of looking at it, whether it is a loss or gain, remember you are comparing the book value or the carrying amount of the asset with the part exchange value. So in other words, the vehicle at cost, 27,500 minus accumulated depreciation 9,075. So that gives you about 18 something, which is way more than the value of the part exchange. So therefore, the business has made a loss on that. So this will be a loss, which is over next part basically. So Dave will be paying the full VAT amount, not this part, but it will be the one after that. Actually, if we can attempt that first, because that's relevant to disposal. So complete the following statement. Dave is recording so they're giving you gain or loss. So of course, we already determined that it's a loss on the disposal of van. In this case here, Dave will be paying the full VAT amount which is due on the new van. Now, first of all, you need to determine how much is the total amount is due. So 36,000 they're given you, which is exclusive of VAT, but we want inclusive of VAT because that's the amount they will be paying. So 36,000 times by 120% value, which will be including VAT of 20%, so which is 43,200, and 43,200 minus the vehicle at cost, this part exchange value. So anything more than that they will be paying to this person. So 43,200 minus 9,500, that gives you 33,700. Okay. So we have a couple of more items. So you can see that these tasks are quite long. There are only 6 tasks, and that's why you will see multiple parts of these tasks. Prior to adjusting for depreciation and extract of tapes, trial balance is as follows. His policy is to use reducing balance method at 20% on the value of the asset, assuming no residual value. There have been no adjustment for depreciation. Now you can see that we need the carrying amount first of all for reducing balance method. So 47,857 minus 18,280, that gives you 29,577, and times by 20%, that's going to give you the depreciation, which is 59. So first I'm just going to write the amount here. So 5915.40. And as you can see that calculate your answer to 2 decimal places. So that's why you cannot round it up or down there. Okay, so which is 5915.40. But in relation to the depreciation charge, what is debit and what is credit? Is depreciation expense debit? They can use the word depreciation expense or depreciation charge for the year. So this is depreciation expense debit and accumulated depreciation. So which is, this is, remember, is office equipment. So office equipment accumulated depreciation credit. Okay. The last part of this task, which is Dave is trying to reconcile his general ledger to the non-current asset register. He's looking at fixtures and fittings. The balance is in the ledger after depreciation is this much. The balance on the non-current asset register for a carrying amount is this much. So this is about the reconciliation. Now you can see the non-current asset register is lower than the general ledger balance of non-current asset. So first one, depreciation for the year was omitted from the ledger accounts. Well, could be possible because if you don't record the depreciation, that means that your balance will be higher, which is the case in this situation. So that can be true. Let's look at the second one. An acquisition was included with VAT in the non-current register. Well, if that would happen, this would have been more amount, higher amount in the non-current asset register. So that's not true because that error would have resulted into higher balance of the non-current asset in non-current register, but which is not the case in this situation. So therefore, this is not true. Okay, so hopefully that this was helpful. I will be recording the videos on all of the rest of the tasks as well for AAT practice assessment 1 and 2. So please watch out for the future videos. I will suggest that if you subscribe to the channel, then you will get a prompt notification of that. So thank you for listening. And I will be back with other videos. Bye for now. It's not a game.